This is Pavan Sukhdev. I'm today at the headquarters of the Institute of Chartered Accountants of England and Wales in London. The ICAEW, as they are known for short, are the United Kingdom's leading accountancy body, and they're also quite international because they have more than 140,000 members across 160 countries. Almost 12,000 firms are members of this body. Today I'm particularly delighted and privileged to be with the CEO of the Institute of Chartered Accountants of England and Wales, Michael Izza. Michael, welcome.
Thank you, Pavan.
It's great to be here, Michael, and in this marvelous and historic building where I think you and your predecessors have more or less created the tradition of accountancy. How does it feel to be here?
Well, it's a great privilege to work here, and as you say, the roots of the modern accountancy profession can very much be traced back to the original members of this institute. So the Big Four, the firms immediately below the Big Four, can all trace their lineage back to this building.
And a lot of accountancy regulation in its inception has been thought through here, and certainly we've seen all kinds of innovations in accounting coming out of the Institute.
Yes, but the history of innovation in this building and at this institute goes back a lot longer. The modern audit was founded in this country in the 1840s,
right.
And since that time we have been innovating constantly since then. Beyond audit, though, in the taxation field, in the accounting standards, all of the innovations that have been taking place around the world have had some connection with the people in this building and the people doing the thinking about where does reporting, where does the business community go next?
Yes. The team that has been working on CORP2020, what we call the new corporation, a lot of what we are thinking suggests that the nature of reporting, the nature of what you disclose to investors, to the public, indeed to the wider marketplace, makes a huge difference in the way human behavior operates. And we believe that disclosing the externalities of the corporation has got to be one of the key changes that needs to be promoted.
Absolutely. And the whole mechanism through which corporations communicate to their owners and their wider stakeholders has undergone a phenomenal change in the last decade. I mean, it is no longer about a paper-based report landing on someone's desk immediately before an annual general meeting. It's now about pieces of information and disclosure coming out throughout the year, some of which are verified, some of which are not. The appetite of the world is insatiable for information about corporations and how they behave and how they're performing, and this is an increasing trend which I think has to be regarded very positively, because as a broad principle, transparency I think has to be good and applauded.
You've been the driver to host this thing called the TEEB for Business Coalition. Now TEEB stands for the Economics of Ecosystems and Biodiversity, and its report that was released in fact yesterday on the 15th of December here in London was basically about risks, about opportunities, but also about how corporations can measure and manage their externalities on nature. And Michael, I have to thank you for taking the leadership here in terms of pulling together this TEEB for Business Coalition, which will drive this initiative forward. What made you do that? Why did you think this was interesting or useful?
Well, I think if we go right back to why I'm interested in this area in the first place, and indeed why so many of my members are interested in it, it's because they look very much at a world of finite resources and see that we can't continue to practice and behave as we have done historically. That's not to say that the way that people behaved in the past was wrong. They perhaps didn't have the information that we have today, but we do have that information today, and we've now got to start to behave differently. Now, one of those developing areas, and I say developing areas with all due respect to academics who've been engaged in this particular area for many years, is externalities and the ways in which companies use natural resources either without accounting for them, or without properly pricing them in, or without regard to the finite nature of them.
Yes.
And they just think that that's something that they can take without ever giving back, without replenishing. And it is a developing area which I think is absolutely vital that investors, consumers, governments, regulators all understand. But most importantly, corporations themselves understand that if they don't pay heed to this, the sustainability of their very business models will come into question.
And part of the challenge is, where do you report this? Because you have these very valid long-term issues which need to be captured, reflected in the analysis of those who look at balance sheets. And yet statutory reporting basically looks at balance sheet and P&L. Oh, sure, it has a few additional items like directors' bonuses or contingent liabilities or post-balance sheet events, which are not directly P&L or balance sheet. They're there. But typically these days we find that the long-term issues in terms of strategic sustainability of business or impacts of the corporation tend to be in some kind of a CSR report, which is published at a different time, at a different place, and doesn't meet the same reception from the audience that you and I would think is relevant, which is analysts and creditors and governments and consumers. How do we address this challenge of where and how to report this?
Well, I think the answer has to be that you report it frequently and often in a number of different sources. Clearly, one of the very important constituencies that companies report to and through is the analyst community, and the rich discussion that management teams have with the analysts at their annual shareholder presentations or in the pre-meetings beforehand. It has to be a primary communication channel. But the other one is the good old annual report.
Yeah, the annual report.
Because why would you say this has served us well for 100 years, but its time has passed? Why can it not evolve? Why can it not evolve to effectively have a more discursive front section which begins to talk about strategy, sustainability in more depth, in more detail, so that it begins to give credence to the long-term earning potential of the company, and then it's supported at the back end
with the
by the details.
We tend to tax typically at the end of the value chain. We tend to tax either the profits, which are the goods, if you like, but not the bads, which are the costs of resource extraction. We tend to tax, to an extent, through value-added tax, consumer appetite for goods and services. We don't seem to look at other elements of the value chain, especially the resources end. Do you think there's some scope for rethinking the entire chain of taxation? How much incidence of tax takes place where along this value chain?
Well, I think you're moving here into an extremely complicated area, but it is an area that I think many more governments are going to be starting to think about quite seriously. Now, the reason why I say that is that because national governments are finding it increasingly challenging to tax major multinationals whose activities occur across borders and can occur anywhere in the world. And you've started to see some appetite to do this, perhaps at OECD level, perhaps at G20 level, around things like the transparency of where the big resource extractive industries make their money and where they pay tax. And as a principle, transparency has to be good.
Has to be, yes.
I should make very clear, for the purposes of this interview, that I am not a tax expert. but I do think that we are coming in the next decade to a particularly challenging period for how some of our traditional tax collection mechanisms have operated.
Part of the change in nature of the corporation, apart from, of course, measuring and disclosing externalities and being more responsible in the use and understanding of leverage, and looking at taxation as its contribution to society, is, of course, advertising. Because advertising in the UK, for instance, is called an invitation to treat, and that says it all. It's a legal category. It's not an offer. And responding to it is not an acceptance. And therefore, you do have this sort of contractual oblivion within which advertising works, and that can create its own pressures. I mean, there is a temptation always to convert wants into needs and to use advertising quite cleverly and aggressively to promote product sales, and sometimes to promote new products, and sometimes to create needs out of insecurities, and that's what gets really ethically worrying.
One of the consequences of a more digital world, a more connected world, is that corporations no longer rely on an advertising hit in a 30-second burst on a major TV network to form how the population thinks about them as a corporate. It now comes down to different facets of their behaviour, how they invest in society, right. How people speak about them, whether that be politicians, regulators, or indeed celebrities, because a celebrity endorsement can either be supportive or damaging, but particularly in areas of great sensitivity around, say, the environment or perhaps financial mispractice. So I think that the changing world of advertising and the reputation in everything that a corporate does go very much hand in glove together. Because if your advertising messaging is saying something different to how you're behaving, in this transparent world, you get found out very quickly.
If all of this works forward, and I guess we all hope that it does, in terms of corporations with the assistance of accountancy bodies who design product standards for disclosure and implement them, takes place, and if we have some degree of government redesign of the entire tax value chain, and if we have responsible advertising as norm rather than exception, today it is somewhat of an exception, and if we have taxation being more constructive in the way that it is targeted at resources, or for that matter at interests and so on, what kind of corporation do you see coming? What is your vision of this sort of future, what we call Corporation 2020?
Well, I think Corporation 2020 will be a more responsible company in all facets of that particular word. But I think one of the important things to stress, because there will be evangelists who want change to happen today, tomorrow. One of the things that we know from experience is that change tends to happen more slowly than people think.
Yes.
Corporations don't turn on a very short circle. You know, they take time, and I think probably the only time that doesn't happen is when there's either a major shock of some description, or effectively there's a burning platform. But people who are evangelists and people who are proponents of this change should not be frustrated if it doesn't happen next week. What they need to see is that corporations start on a journey,
right?
Because this is a journey which will take years, but we all know that it's a journey that we can't say doesn't have an end date, because there are some critical constraints that companies have to be mindful of, whether those are demographic changes, whether those are resource changes, whether those are to extend the resource point, whether those are natural constraints. Yes. You know, these are all things that we are becoming increasingly aware of as business leaders, as strategists, and we know that if we pay them no regard, ultimately the corporation of 2020 won't have a future beyond 2030. Yes. And you know, these are really mind-focusing issues, and I just hope that corporations give themselves a chance to make the changes that they need to make over a controlled period of time, rather than having to do things out of a matter of urgency, where mistakes will be made, where things will be done which are perhaps not ideal, and I think that's absolutely key. So the boards of directors of companies need to make sure that they have a vision to get to wherever that company needs to be to ensure its sustainable future.
Very well said, and I do wish that is a point that is recognized and stressed. And it's great talking to you and being with you here in London at the headquarters of the ICAEW.
Thank you, Pavan.
My pleasure.